If your $5,000 superbike gets stolen, standard insurance might apply depreciation and only write you a check for $1,200. Here is the math you need to know. With over 2 million bikes stolen annually and a recovery rate under 5%, relying on luck isn't engineering, it's gambling. Most cyclists assume their homeowner's policy covers them, but standard policies use actual cash value, meaning they deduct aggressive depreciation from your payout.
Let's run the numbers for a 2026 specification. Dedicated insurance typically costs about 4% of the bike's value annually. Conversely, filing a theft claim on your home policy can spike your premiums by 20% for years, often costing you more than the replacement value of the bike itself.
Theft isn't the only variable. Modern carbon layups are stiff but susceptible to impact damage that isn't visible to the naked eye. Dedicated policies cover crash damage and carbon repair, whereas property insurance usually excludes damage while the vehicle is in use. Insurance provides financial redundancy, but physical security is your primary defense. The 2026 standard for high-risk urban areas is the double lock strategy, an angle grinder-resistant D-lock for the frame and a cinch chain for the wheels. For recovery, redundancy is key. Hide an AirTag in the steerer tube or under the bottle cage, but be aware that thieves now scan for them. Registering your serial number on bikeindex.org remains the most effective database for recovery by police.
Here is the buying framework. If your bike exceeds $2,500, dedicated insurance is statistically optimal to avoid total asset loss. For anything less, self-insure with the best lock you can afford and check your credit card's 90-day purchase protection clause.
Protect your assets properly so you can focus on the watts.